Welcome back to my YouTube channel. My name is Oluwabusayomi A and I film content from Lagos, Nigeria. If you are new here, welcome. Join the family by subscribing. Please click that red button below now. And don't forget to like this video, drop that lovely comment and share to your friends and loved ones. By now you must have seen my previous video, and if you are no subscriber, sorry. If you are no subscriber, what's up now? What's up, G? You know how we roll. So in today's video I'll be talking about the type of investors that we are. All right, if this is the video that you want to watch, just grab your pen. I have mine here. This is my pen and this is my book. So grab them and let's get right into today's video. Quickly talk about the class of investors that we have. We have the active investors and the passive investors. So the active investors, this type of people are directly involved in their investment process. They want to know when the investment is starting, what is happening in the middle of the investment, and even when the investment is going to mature. These people want to know everything, the nitty-gritty about the investment. While the passive investors don't really know much, they don't necessarily want to know much about the investment, or they don't necessarily want to know everything that happened in the investment process from booking to maturity. All they want to know is that they want to know what they are going to get in return. And this type of people, they are, most of them are risk averse, so they tend to invest in low risk securities, right? And they get most of their advice, most of the information from their financial investors or financial advisors. So they don't necessarily have to know what is happening in the process of the investment. Get right into the types of investors. So the first type I have here is busy investors, interested and obsessed with the market. They know everything that is happening. They know when the market is going up and when the market is coming down. So they tend to buy and sell frequently. They buy low and sell high. What I mean by that is they buy at a very low rate when the market is booming, and then they sell, no, they buy at a very low rate when the market is not doing so well, and then they sell their investments when the market is booming. All right, and they are always active, they are busy. And this type of people, they actually tend to invest in high risk securities because they believe that they need to get cool cash from their investments. So they don't want to invest in low risk securities, and their risk appetite is high. The second on my list here, I have casual investors. So these investors are opposite of busy investors. They actually don't want problem for themselves. They don't want to know anything. They don't really want to know anything happening about the investment or anything happening in the market. All they want to know is that they want to invest and get their money at the end of the investment and at maturity. Once the investment is made, they tend to like get all other information from their financial advisor. So they don't really, you know, get to check anything or even get to know more about the investment, or more about how the market is going. So this class of people are under passive investors. So they are not really active. They just want to invest and get their money back. So the next on my list, I have cautious investors. So these people are very, very cautious. They take their time before they invest. They get their options, and they tend to have different options, you know, different investment options before they even go into it at all. They get all the necessary information that they need to get. They gather all the necessary information from their financial investors online, from the company's website and all. They want to know everything about the investment before they even go into it, and they like to have options, varieties before they jump right into that investment. I have here on my list is emotional investors. This type of investors, they put their heart into the investment and not their head. So they tend to be emotionally attached to their investment. What I mean by that is they invest in a particular security, they invest in a particular company, most likely because they like their products, they like their service. They invest in a real estate property because they believe that if they stay in the community, they can help the less privileged. So they don't necessarily want to know if they are getting high return from that investment. They just want to invest because they want to have impact, right? Because their investment is definitely is going to have impact, positive impact to the company or to the community that they are investing in. So they don't really necessarily, they are not investing because of the returns. They are investing because they want to have impact. This type of investors, they can be passive and they can be active at the same time. Active in the sense that they want to know everything happening about the investment. They are actually interested, but it's not like, not necessarily that they are interested because of the return, like I said earlier. And passive in the sense that they just want to trust their financial investors to give them financial advisor to give them the best interest and return from it. My list, I have informed investors. So this type of investors, they know what's up in the market, they know what's happening in the market, they know the type of investment to go into in a particular time. They even want to, get into high risk investment because they know when to pull out and all that. And they also get their information from their financial advisors. So they tend to have options on what to do and what not to do. And this type of investors, they can be risk averse and their risk appetite can be high as well. So it depends on what they want to do and how quick they need their funds back. Have technical investors. Technical investors, they deal with numbers, they want to know their numbers. So for example, let's say they are investing a 1 million naira, they want to know that, okay, this is what I'm getting at the end of the day. And you tell them that you want to give them 5% interest. So that 5% interest, they calculate it, they pen it down and know that, okay, at the end of the investment, I'm getting this particular amount back. Anything that is different from that amount, you're going to explain. So technical investors, they deal with numbers, they are informed, and they like to do with what is my rate, what am I getting back. So this type of investors as well, they can tend to be risk averse and they can tend to want to invest in high risk securities. It just depend on when they need their money and what they're actually getting back. It's dependent on the number that they are getting back at the end of the day. If you have watched to this moment, I believe that you enjoyed this video. And if you're yet to watch the first episode, please, once you are done with this, go back and check the last video on my channel and watch. Click the red button below to subscribe. Okay, like, share, and drop that good comment. Let me know what you want me to do next. This is still an ongoing episode, and you still see more of investment options, type of investment that you can go into, and at what time you can go into it. But before then, you need to know what type of investor that you are and also the investment terms. All right. Okay, guys. So till I see you in my next one, stay cool. Bye.